Good morning, traders. Welcome to Wednesday's edition of the Phoenix Blue Morning Update. In a moment, we'll have a brief look at the Asian markets overnight. We'll have a look at what happened in the markets yesterday, our current open positions, and opportunities that may be arising today. A little bit of a focus on tonight's Fed funds rate announcement and the FOMC statement, and it's there we'll start with a look at the news announcements of significance today. 3:30 this afternoon. The first one, we have the US crude oil inventories. Obviously critical at this moment in time. We know there's loads of overproduction worldwide. Stock holdings are at some of the highest levels ever. We'll be looking to look at any sort of significant move in either direction as having a direct impact on short-term crude prices. 7 o'clock, we do have the big one, the federal funds rate announcement and the FOMC statement. In December, we had the first rise of 0.25% from the Fed, that being the first rise for almost 10 years. We don't anticipate another rise in January tonight, but the market will be focused on the statement for any indication of when we will next see the promised rises for this year and what the magnitude of those rises might be. Similarly, the New Zealand dollar at 8 o'clock, they have their official cash rate and the Royal Bank of New Zealand statement. Here, this market is completely the opposite. Their current interest rates are 2.5%. Their economy is in trouble. We'll be looking for a rate reduction rather than rate increases. If we don't see that, again, the focus will be the statement to see any indication of when we might expect that. At 9:45, we then have the New Zealand trade balance. Okay, so over to the markets themselves and the overnight Asian markets. First up, the Shanghai Composite. The level here is the 2015 lows. We had this big down day yesterday. Today, when I opened the chart an hour ago, this market was also a much more bearish than it now looks. Obviously, towards the close, some supports come back into this marketplace. Why have we had this big movement down? Possibly because we had a key economic indicator which isn't as well known as some of the other headline rates, that being the annual freight volume. Now, China's an industrialized country. It moves a lot of raw material and a lot of finished products. The majority of those being moved by rail. Last year in 2015, the volume of that rail freight dropped by almost 12%. The preceding year it had dropped, but only by about 4%. This seems to reflect what we've been seeing in the Chinese industrial production figures, where we've seen negative figures 10 out of the last 11 months. Okay, onwards from there, quick look at the US dollar one currency pair. Nothing happening there. We're looking for every day just to see if there's any devaluation on the part of the Chinese government. Over in Japan, the Nikkei 225, again the horizontal here is our 2015 low. We saw the big test down last week in conjunction with the major equity markets. Overnight, this market has followed the equity markets from yesterday, making gains predominantly because we saw a bullish move or retracement in crude yesterday. Okay, over to crude itself. And although yesterday we saw this candle here, quite late in the evening, this was a really bullish move. Obviously, into the close, there's been a lot of selling. So we're not quite as bullish as we were in the short term on that market. We are very bearish overall on this market. We still see lows below $20, and we're looking for a pullback opportunity to get in at one of these levels. Okay, right. Next, over to the dollar index. Okay, we've been watching the breakout of this triangle. We're retesting at the moment. I envisage that this will be a very quiet area or a very quiet market until we have the Fed announcement tonight and the FOMC statement. Then we're going to see a move confirmed one way or the other, be it long, which will irrespective of what happens, will remain our bias on the dollar. Okay, over to gold. Now, you're aware our bias here is very much long. We're in this market. We bought this market at this level. We took first profits at this level yesterday. That was a 450 pip win. We banked profits. Our stops above break even, so we're tying in further profits. We're looking for the opportunities to add in again into this market. This high here giving us the potential to do just that. But anywhere on the move up to what will be our longer term target at this level, we'll be looking for opportunities to aggressively add into this market. So far this year, gold has increased in value by about 5%. Last year it lost about 10% of its value, so already in a month of this year it's regained half what it lost last year. Definitely a market to have your eyes on over the coming months. The Swissy, dollar CHF, again we're bullish this market. We had an entry here, we've already taken T1 profits, our stops are at break even. We're looking for a retest to add in of this high here. Doesn't look like that will happen, but we remain bullish that market. Our target, or our longer term target, remains the high from November last year. Over to CAD. This is a market we've been talking about. It's been overextended. We're looking for a significant pullback. Significant levels we've been looking at are around the 1.4 big number level here. We're also looking at a 1.38 level here, in confluence with this trend line coming through here. We have the order in place here. If that fails, we'll also have an order in place here, looking to regain our losses on the way through to our first target, which would be the December highs here, looking for a longer term target of 1.5. Quick look at the S&P. I inadvertently yesterday talked about the S&P over a chart of the CAD JPY. Markets do look very similar at the moment, both reacting exactly the same way to the risk on, risk off scenario, which was the basis of the conversation yesterday. Here we can see yesterday a bullish move on the S&P, that being a reflection of the bullish move we saw in CAD through the day. Okay, so that wraps up the look at the charts. Just remains to say that here at Phoenix Blue, we only trade when we have a very strong directional bias. We determine that directional bias by looking at fundamental analysis, technical analysis, and the analysis of the commitment of traders report. Only when all three of those line up do we have a bias, and will we trade that market. We use our own entry and money management systems to exploit these biases. These systems let you trade with on average 40 to 50 pip stops, allowing you to take profits sooner and get your risk off the table sooner. Now, this is all covered as part of our latest Protégé program, and if you're an existing trader looking for a breakthrough or looking to enhance your trading, you can contact us on info@PhoenixBlue, where you can find out exactly what that program includes and what it can do for your trading. Okay, that wraps it up for today. Thank you for listening. I hope some of the information's been useful, and I look forward to speaking to you again tomorrow. Goodbye.